Well, as European traders look to exit for the day and for the week, I thought I'd take a look at the sterling versus U.S. dollar. Let's get started. We are seeing the pound versus U.S. dollar move to the upside in trading here today, helped by the U.S. data and lower yields in the U.S. as well. We saw the price move above the 100-hour moving average. That's at 1.27539. And over the last 3 hours, or at least 2 hours, we've seen the price trade mostly above that moving average level. That keeps the buyers more in play here. I won't say that they're necessarily in control, but they are in play. On the top side, we have the 200-hour moving average and the 38.2% retracement of the move down from the high seen in July to the low that we saw in yesterday's trade. As a matter of fact, the 200-hour moving average and the 38.2 come in near the 1.281516 level. The 200-hour moving average is moving to the downside, so it would come ahead of the 38.2% retracement. But what I like to look for is that on a corrective move of a trend move to the downside, the price needs to get above the 38.2% retracement. It doesn't get above that level, then guess what? The buyers aren't winning, okay? This is just a plain vanilla correction in what has been more of a move to the downside. So that's why I'm a little bit reluctant as far as giving control more to buyers. Yes, they're in play. Above the 100-hour moving average is more positive, but they need to get above the 200-hour moving average, and they also need to get above the 38.2% retracement. Let's take a look at the daily chart and see what that is telling us. And when you look at the daily chart, you get a different view, and this is more of a longer-term view that may feed into the hourly chart and give us more of a bullish momentum from that perspective, from that shorter-term perspective. And specifically what I speak about is the inability to move below the 100-day moving average. That's the blue line in this chart. If you go back to the month of May through here, the price also came down to the 100-day moving average, found support buyers, and in the month of August, the low price that we saw the other day, the price sniffed down toward that 100-day moving average and found support buyers. We also found support buyers against this swing area here, which comes in near the 1.2595 or 98 level, I guess, and so the inability to move below that level also keeps the buyers, I guess, in control on the in this longer term perspective. So if I were to characterize this pair from this perspective, from a bias direction, I would say that we are looking a little bit more or more positive here in the sterling versus U.S. dollar. By the way, we're also above this, trading above the 61.8% retracement, or at the 1.27605 level. That's of the move down, the longer term move down from this high going all the way back to 2021 to the low seen in 2022. So the buyers are more in control in the sterling versus U.S. dollar on the daily chart. On the hourly chart, they're in play, need to get above the 38.2% retracement and the 200-hour moving average to prove that they really belong in the bullish camp for this pair going forward and going into the new trading week. That's my look at the sterling versus U.S. dollar. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.